And the futures right now, as you can see, weak and actually a little bit weaker than when we started. Joining us now, Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. It hasn't been a great week, maybe the first one where the NASDAQ has had a pullback. It all seems to trace back to that number on Friday and kind of a hangover because the Fed has more work to do. I heard that there are certain big investors that are worried about the CPI coming in hot and positioning for something bad this way coming. Have you heard that, Steph?
Yeah, hi, Joe, good morning. I think it's not only the CPI coming in at about 6.2%, and PPI, by the way, but it's also yesterday the Atlanta Fed wage tracker came in at 6.1% versus last month at 6.1%. People thought that maybe that number would be coming down. So that kind of, I think, affected the market yesterday, and that's why we kind of rolled over. And I think just people are nervous that, okay, inflation is coming down, but just not fast enough, so the Fed still has to put their foot on the gas.
You always come to us with ideas that work anytime. So specific names this week that have done something to get into a place where you'd add to positions, or you already own and they've had good weeks. What happened this week?
Yeah, well, I think we should own more Disney, quite frankly. I mean, I think that Iger delivered in spades. And I think the fact that we don't have an activist in there, I mean, I was very supportive of Nelson Peltz being involved because Disney really has lagged in terms of the fundamentals and numbers and shareholder returns. But I think that the cost-cutting initiatives are really very, they're positive. I mean, I know we don't like to hear about layoffs, but they're positive in terms of streamlining the company, getting better profitability. And I think if you step back, I mean, the parks numbers were amazing, right? And we're just beginning to see global growth starting to reaccelerate in terms of China, right? And that's going to help them as well. So I think there are a lot of exciting things at Disney, and the stock has lagged for the last couple of years. So I like that one a lot.
Kind of a just seems like it's kind of a retrenchment story instead of a growth story. Layoffs, reorganizing divisions. Yeah. What does that say just about the overall environment? Are we in is the S&P itself in a macro sense in a similar position? Layoffs, cost cutting, retrenchments. Doesn't seem like a great time for some reason if we have 3.5% unemployment.
Yeah, no, I think we're kind of in this trading range because overall, I mean, we have these puts and takes. We have a lot of cross currents going on in the overall economy, right? We know that manufacturing is not great. We know that housing probably in a recession, although I'll take the other side of housing because I think we're close to trough there. But those two pieces are really negative forces in the environment right now. At the flip side, I mean, the jobs numbers across the board are great, right? Like non-farm payrolls, JOLTS, are really great. Initial claims, even yesterday, I know they were up a little bit, but the 4-week moving average still down about 10% year over year. So jobs, wages, inflation coming down a little bit in certain pockets. And so, I mean, overall, I think you're in this trading range because you've got these puts and takes in the economy overall. And we just have to get through this slump at this point in time. But we'll get through it. And I think there are opportunities on weakness to be buying.